As we start 2026, we see three things clearly in the venture ecosystem. Innovation continues to occur at a very rapid pace. Underwriting businesses becomes more complex in a dynamic environment, and increasingly, a significant amount of capital concentration in a very narrow set of deals. Not surprisingly, artificial intelligence over the last few years has generated much of the enthusiasm and the focus, but the long-term outcomes are more uncertain. In this type of a market, we believe selectivity and a focus on quality are important. And to help us think through those considerations, I'm joined today by four investors from Wellington's private equity platform. Each of these investors provides a different and unique perspective and experience, spanning early stage to late stage venture, as well as climate and biotech specific considerations. Thank you all for joining me. My first question I want to ask you all today is, if everyone is looking at AI, what are the potential opportunities that are being missed? Oz, I think it'd be fantastic to start with you, given your perspective on late stage, and then we'll transition to Sasha, who can provide her perspective from the early stage.
Thank you. As a late stage investor, I always hesitate to say overlooked, given I'm looking for high growth companies that are late stage, so they tend to be a kind of a pond that's fished pretty frequently. But when I think of all of the capital that's being really focused on these themes like AI, I get very excited about companies with tangible assets, with regulatory complexity, operating complexity. I think of these as hard moats for companies. And so if you kind of take the point that software and anything digital will move towards commoditization over time, then I think these kind of hard moats will accrue a lot of value over time. To kind of substantiate it more, imagine in e-commerce or in a retail business, you have a very dense operation of warehouses, or if you're a large fintech platform, you've got a large balance sheet, you've got licenses to operate in many different countries. These are the sorts of things that I think over time will accrue value in a world where a lot of the bits or the software of business become a lot more commoditized. I think that these businesses could also use AI more effectively to enhance their businesses, even if they're not AI native, so to speak. So I'm looking at some of those more traditional business models coming into 2026.
And then Sasha, I'd like to bring you in on the early stage so we can compare and contrast.
When we think about opportunities that are underestimated, we have a few sectors from an early stage perspective that we're really focused on. We think that 2026 is going to be the resurgence of consumer. Consumer has been really overlooked and really out of favor over the last few years. I think many investors have not seen the amount of proliferation in the category that they've wanted to see. However, we are starting to see really interesting utility in consumer being driven by AI technology. We're seeing this a lot in things like personal finance, health and wellness, creative tools. But we are really excited that this year we're going to see the next generation of those companies. And at this point in time, we're excited to see how companies build around personalization and incorporate credibility, incorporate trust, incorporate transparency around the recommendations that are coming out of these models. We're focused on a few other areas, but I'll break and let my colleagues talk about what they're interested in.
One area where we continue to see a lot of opportunity is in the electrification of the grid and the demand for the first time in decades for an increase in electricity. Through that, we do see energy generation being a bottleneck, and the ability to meet the demands of data centers in energy is going to be a critical piece of how we continue to fuel AI in the next decade. As we see an aging grid infrastructure, long interconnection queue timelines, we believe that both energy generation, whether it's the notion of bring your own energy or microgrids, is one area in which we see potential, but increasingly grid optimization is another area that we are excited about. And so that means things like grid intelligence, digital twins, ongoing operational observation, management, and analytics, where we believe that the hyperscalers and the data centers themselves will be able to work more synergistically with energy assets in managing real-time both demand on the compute side and availability of energy supply.
So on the biotech side, when considering opportunities outside of AI for investment, the most important thing to remember is that biotech is fundamentally different from tech. It continues to be an area of strength in the non-AI private investment ecosystem. We've seen a number of AI-enabled drug discovery and development platforms emerge. We don't think that these will impact our core investment areas over the short to medium term. Fundamentally, value creation in biotech is gated by drug regulation and clinical biology. And what we find with generative AI is that it can support processes, but we've not found it to decrease timelines to review and approval of novel therapeutics, nor to increase the probability of clinical success in trials. And unless and until that happens, we see that the biotech ecosystem will continue to be fundamentally distinct from what's happening in the tech sector. What I will say is that over the last several years, biotech has gone through a significant bear market, and we're slowly emerging out of it. And we see now as a great opportunity to deploy capital into that sector on attractive terms.
It's definitely clear that across all the stages you look at in the specific sectors that there's a ton of innovation occurring, there's a ton of interesting opportunities, but there's also a lot of noise. And so to be able to differentiate where you're going to spend your time and focus on those signals, this gets into my next question. And Molly, I'll start with you, and then Sasha, you. How do you determine quality and value when things change so rapidly and there are so many exciting developments occurring?